Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So as any other markets, gold provides no clarity by far on direction as everybody prepares to the Fed meeting. This market is preparing for the best, but as usual expects the worst. And in the current circumstances, the patterns that we see currently are forming on intraday charts carries a lot of risk to deal with. And well, if you would like to take the position with them in this possible direction before the Fed statement, in this case you will have to take rather significant risk. So that's why we mostly call to the patient and wait when some important support area will be reached with the estimated targets around it. That could really make our life more simpler dealing with this setup that we have in the gold. So meantime, as you can see, on the gold market, overall performance turns relatively slow and choppy. It's forming no direction. The grabber that has been formed on the futures market on Friday, currently, well, theoretically it's still valid, but you can see already some spikes around it has happened. So market hasn't followed immediately to the downside with this grabber. So this pattern looks also a bit tricky, but still we could say that it is not failed yet. And in general, this grabber stands in direct relation to the pattern that we have on the intraday charts. So probably if our trading setup, bearish setup that we have on the fall time chart fails, that will happen simultaneously with the failure of the grabber. So they mostly shows on the same direction. So currently we can't say that this is definitely bullish type of action. Despite that trend has turned bullish, price action stands mostly forming some flag pattern. After the collapse, appearing of the flag, it's usually the downside continuation pattern. So at least following the classic approach. On the lower time frames, some tricky moments exist. First of all, recall what we said about the pattern. So we said that it would be perfect if market will complete daily grabber, complete our free drive pattern simultaneously with the COP extension, and then, for example, based on the Fed comments, jump up, giving us also the weekly bullish grabber that we have talked about. It's confirmed. That will be just perfect combination. That could let us to step in strong support after all targets will be completed. But currently we have a bit different type of action. Market is calling around the top. Theoretically, the bearish setup is not failed. It's because market stands below this top. So this is first vital point for the gold. So if market will break it up, that will totally reshape of the short-term analysis, short-term context, because the patterns that we have suggested to happen will be erased, and we will have to search for something else here to consider. Everybody understands that possible action will happen based on the Fed statement. That's actually the only driving factor for the current week. So this is the first moment that we have here, and it makes difficult to make the decision. So it is relatively simple for those who are patient and for those who are conservative. They will do nothing and just sit on the hands and see what will happen. But those of you who prefer to trade actively and you're a bit worried to miss the trade, you do not want to lose this opportunity, it is really a big question to you how to enter. Just because if you'll take the position here, you will have to place stop somewhere below this free drive target. It's just because if market still will complete it and reversal will happen, just to not be washed out on this action when the pattern will be completed. That puts you with the really significant risk here. At the same time, if you will wait for the free drive, you could miss the trade if Fed comments appears to be dovish and gold market could rally up right from here. Well, that's why it's really difficult moment. So one of the solutions might be, I suppose, that you could try to use stop buy order. For example, slightly above this top or slightly below the top. Here maybe it will be even better. And if market starts tending higher, trying to break it up, your order will be filled and you will step in by market price in the moment of the breakout, and you will be possessed for the upper direction. This is one of the solutions. So maybe you could think about it. So on the hourly chart, overall performance also looks a bit heavy. So take a look actually what has happened on Friday. That was a rally on the closing of the bearish positions, or better to say bullish positions on the United States dollar based on the CPI numbers. But for example on euro currency, this rally has been reversed very fast, as it was used for taking the new shorts, and euro now dropped right back to the previous lows. On the gold market, it's a bit different story. So market has shown the performance on Friday, some retracement. Here was the minor washing rinse of these tops, has led to collapse, and now market stands flat, forming some consolidation. So one of the patterns that potentially might be formed that could reshape the short-term situation is, take a look, this might be kind of the hand and shoulders with this ABCD pattern and the target around 18 even. It's one of the scenarios that could follow. So maybe you could try to use this one with the place stop somewhere below the C points. But as you understand, overall price action here is very choppy, and currently I do not see really a scenario that I would say yes, that's perfect, we could rely on it, and well, agrees with the monthly, with the weekly chart, on daily trends, some directional patterns or something of that sort that we usually follow too. This is really very tricky price standing, and everything could happen. So this is more risk to deal with. That's why this mostly choice will be is up to you. We just would say that for the conservative traders, we prefer to wait, as we have the clearer 3-drive pattern that is potentially valid, it's not cancelled yet, and it might be formed based on the Fed statement. Once it will be formed, we consider taking the long position. For others who would like to trade through the Fed statement, and those of you who would like to buy gold, well, you could consider these moments. Either using the stop buy order near the breakout of this top. One of the advantages of that, if gold market starts dropping, your order just will be not filled, and you will not you will lose nothing. Or maybe you consider taking the position based on this kind of the hand short or something of that sort, with the stops below the C point. This is another reason. This is another background that we have currently. That's unfortunately, guys, all that we could consider currently on the gold market. As market remains thin, everybody waits for the Fed, and nobody would like to take the big positions before this will happen.